Welcome to TradeTheMBI.com. This is John. This report is for the 5th of May, and it's always great when the 5th of May is on a Friday because that means nice weekend for Cinco de Mayo. But the markets, we're feeling a little bit of pressure, obviously, from our readings. We had the MBI white spike with magenta and yellow moving below the 33, so we were expecting continuation to the downside. And didn't disappoint. We did have some benefits though from DOC showing the short-term buyers pushing up, so we figured supports would hold, and it did at the 61% Morganacci line right there. And with that white, if it had maintained its lead, we would have expected to move to the 50%. Not entirely impossible, but I think that short-term buyer move probably enough to keep things from getting delicate. Of course, you still have the banking situation that's causing some difficulties, and how much that spreads and whether the Fed can contain it with their liquidity in that. Yet to be seen. But they're going to throw everything at it, which just usually means ridiculous amounts of printed money. From an NQ standpoint, it held at the 76, and um, that was because we still had that magenta above that 33 level. Now it has dipped below. So if white MBI had maintained a lead and you didn't have steel moving over cyan, you would have expected more of a move lower. What to me is interesting is we're not getting a straight dive of the orange DOC straight down, which suggests a pivot up would cause more weakness. And so that will be interesting. But I think you'd have to have a corresponding pivot up of the white uh, MBI in order for that to really be a major negative. I think it's just normal uh, correction. And from a NASDAQ standpoint, still relatively strong. So no major crisis there. From a Treasury standpoint, obviously the rates have risen, and yet TLT rising, meaning lower rates. But that's just the amount of money flowing into it. At the end of the day, um, no improvement in rates, and the Fed doesn't appear to be changing its stance on that at all. From an oil standpoint, still under 70, so holding on. Um, this little brief counter move doesn't look like it is going to be sustainable, particularly with the red leading, but you have to see a pivot lower first of the magenta before that would remain true. But again, the longer it can stay there, I mean, it's not enough time yet for it to be of a significant impact. But if it can last for a month or more, below 70 would be uh, dream come true for the Fed, at least from an ideal standpoint of easing pressure from an economic standpoint and helping them to maintain these accelerated rates. It is the first attempt to try and really normalize rates back to pre 2009 configurations. It's been that long since they've been even had the remote opportunity to do so. But from a gold standpoint, in that, of course, you have the debt crisis looming, things like that, and that's going to play out for weeks to come. So it's not the tip of the spear, so to speak, right now, but it could grow. We'll have to see how it plays out. But euro and that ridiculous levels there, but this is within that range, all the way up to 114 is within that scope. 114 down to 108 range is doable, um, from a perspective of giving the appearance that everything is okay. So they'll continue to do that. And you think if regional banks in America have issue, European banks, unbelievable disaster for them. Um, and how they're going to contain that is just going to be ECB interaction and uh, the Fed providing liquidity overseas, ironically. You're going to continue to see the Bitcoin as well as the ETH, I think, continue to make moves back towards their highs, and if not, accelerate past where they currently were. Because again, you have your choice, your gold, alternative currency, playing within some of the uh, regular fiat currency is a little bit more problematic because whether it's the US, Europe, they all have the same issues. So if you're looking for an alternative hedge, that's definitely where it has to be in gold or into the crypto space. And again, my TS just rebooted, so that's not going to help me from an intraday. But That's the long and the short of it for now. Currently, pre-market showing a little bit of boost, but again, that's been the case for the last month or so, where it starts out strong, and then as the market begins to trade, people liquidate inside of strength. So that's been the course of action, which has led to where the S&P is, at least at this particular stage. And um, no reason that won't continue. Though at this particular stage, you do have new fund money coming in that could be enough for dip buyers to want to jump in with that extra liquidity from all the pension funds that are throwing money into it at the start of every month. So we'll go with what the readings are, and we'll continue to follow things along. As always, though, trade well. We'll talk to you later.